Hello and welcome to Compounding Curiosity. I'm your host Kalani Scarrett, and this podcast is all about compounding your curiosity alongside my own through thoughtful interviews with interesting guests. For transcripts and detailed show notes, check out the links in the description. Hopefully you're as keen as me to learn something new, so let's get stuck in. Alrighty, my first ever anonymous guest on the podcast today. So today I'm lucky enough to be talking with Punch Card Investor. Punch Card is a private investor working in investment management in Singapore with prior experience in M&A and investment banking. He's the author of the Punch Card Investor Substack blog, where he does deep dives on companies in the tech, gaming, media and consumer sectors, and recently completed a series of articles on Sea Ltd. So today's focus will cover everything Sea Ltd from Shopee, Garena, SeaMoney and everything in between. This episode will have Sea Ltd covered. So please enjoy my conversation with Punch Card Investor. Punch Card, thanks so much for being on today. But maybe I'd just love to start with Sea and why did you choose to deep dive on them in the first place and what got you interested?
Sure. Yeah, so my involvement with Sea goes back several years. Actually, when I was moving from Australia to Singapore, this is sort of back in 2018, I was reaching out to my friends and networks here in Singapore, and one of the friends here that I had was actually working in Garena at the time, which is Garena is the gaming of Sea. And actually, this was the first time that I heard about this business, and upon speaking to him, I was instantly pretty intrigued. I mean, back then in 2018, it was a business that wasn't very well known. It only IPO'd not long ago, sort of in 2017, and it wasn't really performing that well. It was down about 50% from its IPO price. But I was pretty intrigued. I mean, here's this business that was exposed to three structural growth trends of gaming, e-commerce, and digital payments. And on top of that, it was exclusively focused on Southeast Asia, which is one of the fastest growing regions in the world. And I think my perspective was there was nothing really out there like that in the public domain. It was pretty unique. Yeah, and I guess unlike most other early stage tech companies, I like the fact that it had a very profitable gaming core. And back then in 2018, when the share price was $10 or $11, all of the value was really attributed to the gaming business. I mean, just even under a conservative valuation. And so you're really getting Shopee, which is the e-commerce business, and the payments for free. So I invested at that point, and I think most listeners probably be well aware of the phenomenal growth that business has had. It's become now the largest tech and internet company of Southeast Asia, and it's really become the darling of Singapore's technology scene and more broadly of Southeast Asia, and it's become by far my largest position and the company that I follow most closely. And it's just been fascinating to watch their growth, and it's been very impressive tracking this management team and what they've done. And when I started writing my Substack blog about 5 months ago, I knew that this is a company that I would want to cover at some point. And so what I've been doing over the last 2 to 3 months is writing a series of articles on this business, which I've just completed. And that's been a very fruitful process for me, as you think you understand something, but until you go to write about it, you actually realize there's a few gaps in my knowledge, and I think the whole writing process, particularly in a public context, really helps to structure your thoughts, and it certainly helped me deepen my understanding of the business and revalidate the investment thesis for me. So here we are.
So yeah, that's perfect. So before we dive into each individual arm of Sea, could you just maybe walk through and set the scene, like what's happening, who Sea Ltd are, and what they're trying to achieve? Because I think that backdrop's pretty important of how their whole ecosystem works, I guess.
Yeah, sure. So Sea is now about a $160 billion market cap company. As I mentioned, it's the largest tech and internet company of Southeast Asia. And just at a very high level, it's essentially three businesses. So you've got Garena, which is the gaming business, highly profitable, almost unheard of 60% EBITDA margins. And it's producing about $3 billion of cash earnings a year. And a large part of that is due to the huge global success of its self-developed game called FreeFire. Now, the basic dynamic of this business is that these earnings from Sea are being reinvested in much higher growth but unprofitable Shopee, which is the e-commerce business, and SeaMoney, which is the FinTech business. And Sea is not really focused too much on achieving profitability of these businesses at this stage. Really the purpose for them is to try to aggressively scale these businesses. And with Shopee, they're looking to really enhance their lead in Southeast Asia and now increasingly expanding globally as well. And really the benefit of having a highly cash flow generative Garena cash engine is that they're able to have the luxury of being able to focus exclusively on scaling and of these businesses and not monetizing too soon. And I think that is a significant advantage that Sea has over its regional competitors like GoTo in Indonesia and Grab, who as of yet do not really have profitable core businesses. And one other key sort of important thing to understand is that the company is founder run by a founder and chairman Forrest Lee, and under him is a very kind of capable management team who is very young, average age around 40, so it's very young in a business sense, and ambitious, driven. They're very strong executors, and generally regarded as one of the best management teams in the region. And so I think that's certainly a key part of most people's investment thesis for this business.
Maybe we'll touch on management later, but we'll start with Garena. So with Garena, for people that don't know, that Garena is basically the cash engine funding other loss-making growth businesses, and the majority of Garena's earnings single-handedly come from FreeFire, their battle royale game. So should investors be concerned, if at all, that FreeFire's life cycle is coming to an end, or how do you view the gaming life cycle and what that means for the rest of Sea, I guess?
Yeah, that's a fair question, and I think that's really, I would say that probably forms the crux of any bear case argument for Sea, that maybe 60 to 70% of the earnings are coming from FreeFire, and then if that game is now in its 5th year, so if the popularity of that game unwinds, then that will bring down the cash engine of Garena before all the other high growth unprofitable businesses, Shopee and SeaMoney, get to profitability, and so that would sort of potentially halt the entire business. It's something I've kind of spent quite a bit of time looking at, and so my view is that it looks like FreeFire is going to become one of the enduring franchises in the battle royale genre. I mean, typically what you see with gaming is that there's a very kind of heavy Pareto principle in action, where you've got a small minority of games, say 2 to 3 games in every genre, that the market tends to consolidate around, and that's due to strong network effects, scalability, and popularity, right? And the rest of the games generally don't really make it past 1 or 2 years. And it looks like in the battle royale genre, the big 3 are going to be Free Fire, PUBG, and Fortnite. And in fact, if you look at sort of Google search interest and total active players, I think Free Fire seems to be outperforming. And then I guess the other point is that if you look at top 10 multiplayer games as of today, some of these, actually quite a lot of them, are over a decade old. You got League of Legends, which has been around since 2009. You got Call of Duty Mobile. I mean, that's based off a very old franchise. Games like Counter-Strike Go. So these games are still hugely popular, even though these names and these the franchises themselves are very old. And the reason this can happen is that these sorts of games are multiplayer and social first, all right, which means that their playability is significantly enhanced, as every time you play it, it's a new experience. It's very different to traditional single-player games. So I think this whole idea that games can have a sort of a short life cycle, it's probably more orientated around these traditional single-player games, which you can finish within a few hours. That's certainly not the case with multiplayer social games like Free Fire. And I guess generally, the business model evolution has seen that instead of, with traditional games where you're paying up front for them and all of the revenues booked up front and then they finish them in a few hours, with games like Free Fire, they're free to play, so which means that they can scale incredibly well, and then they're monetized through in-game purchases, so things like skins and weapons and various virtual currencies, etc. And so what you end up getting is a bit more of a recurring annuity-like revenue stream, which can last for many years. And I guess the other key point is that the multiplayer aspect certainly enhances the playability, but also with these sort of games, you have kind of a live ops development concept where there's really fast development iteration cycles where they're constantly updating the game's content, introducing new themes, new sort of collaborations, and all of this helps keep the game sort of fresh and sort of the content evergreen, right? And there's another bunch of other things that Garena is doing to really enhance the longevity of FreeFire. And I think you see them now on earnings calls increasingly referring to FreeFire as more of a platform rather than a game. Right, and it's certainly been the case with the new enhanced version of FreeFire, which is FreeFire Max, which is sort of not only comes with enhanced graphics and sounds and effects, etc., which makes it more attractive to higher spec phone users, but it also comes with a new feature called Craftland, which is allows people to create their own maps and other user-generated content. And that's what I mean. It's now becoming much more of a platform. On top of that, they also do various in-game events. Things like parties. Like they recently had the 4th year anniversary party where you can sort of kind of just go in there and hang out, almost like in a multiverse type. I know it's a buzzword, but that's kind of what they're almost trying to emulate with these sort of experiences. So I think when you kind of look at all of this in totality, it seems to me that this is a franchise that will have staying power. There's probably one kind of maybe concern that's probably come out of the Q3 results is that it looks like that the active player base growth has potentially slowed, at least on a sequential basis. It's slowed considerably, and so there's probably a bit of a concern coming out from Q3 results whether, does that mean that there's a slowdown in FreeFire? So my personal view on that is, in the context of the last 12 to 18 months, given the absolutely exceptional growth that they've had, they've doubled their active user base in the last 18 months, a slowdown is probably to be expected somewhat. And even if the active user base now slows, consider that they're now over 730 million people, which is a huge number. So 1 in 10 people in the world are literally playing Free Fire. Even if the active user base slows, they're still quite early in the monetization journey. So what the company will probably be focusing more on going forward is actually, not so much maybe growing the user base, but enhancing monetization, right? And so that means increasing the number of people that are paying for the game. So at the moment, that's just under 13%. 13% of Garena's active users are actually paying users, which is a fairly low number. So if you look at some of their more mature markets where they've been around for a while, so Indonesia, for instance, the paying ratio there is 17%. So that tells you that there is quite a bit more upside potentially to increase the average paying ratio across the business. So I think even if the popularity of the game does start slowing, I think the actual ability to monetize and earn revenue can still persist for quite a number of years. And I think certainly many games have shown that they will monetize well past their peaks in popularity. Games like GTA and World of Warcraft. So from that perspective, I'm fairly comfortable that this is a game with staying power.
If they are going to try and continue growth, and you mentioned FreeFire Max, but maybe a reason for FreeFire's early success was its lower specs that needed for the game in mobile first. So given it's extremely popular in Southeast Asia, Latin America and other emerging markets, how do you think maybe they expand into North America and Europe? And is that even on the radar for them, or are they trying to focus on monetization first? How do you view that?
Yeah, so actually they already are in the US, and that game remarkably has been doing really well there. So for the last 3 quarters, it's been the highest grossing battle royale game, which is pretty impressive. This is just the kind of original version of Free Fire. So and it's out competing heavyweights like PUBG and Fortnite. Despite its much more inferior, more cartoony type graphics. So what that suggests to me is that just on gameplay alone, this game can do well, which gives me a lot of comfort. And then on top of that, when you add on FreeFire Max, which the whole point of FreeFire Max is that it's designed for higher spec phones. It improves the graphics and the special effects. So in a way, it's now trying to tap into that, the higher spec type demographics, right? And so in a way, that game should also help expand the TAM, and that'll probably be a key part of trying to penetrate those more developed markets.
Yeah, and to be honest, I think people forget it. At the end of the day, it is a mobile game. It's not trying to compete with PlayStation, Sony and PC games. Like, it's its own thing, so it doesn't have to be the highest spec.
Exactly right.
Maybe in terms of other sources of cash flow for Garena. Is it naive to think that Tencent will renew their distribution deal with Garena in 2023? And why wouldn't Tencent take it out themselves? And maybe just give some background, I guess, and some context around the deal to people who might be unfamiliar.
Yeah, sure. So Garena was originally founded in 2009. So, before Sea became a company, it was actually just Garena. And shortly after that, Garena managed to secure their first publishing deal in the region, which was Riot Games' League of Legends, which is a popular MOBA game. Riot Games at that point had a Tencent as a big investor, and so that deal got the attention of Tencent. And Tencent shortly after invested 40% stake in Garena, and as part of that, they got a sort of distribution agreement with Garena. And in 2018, that was formalized into a sort of a kind of proper agreement where what Garena gets is a right of first refusal on any Tencent game, and to be able to distribute any Tencent game in the region. Right. So what that means is that Garena can kind of look through Tencent's portfolio, whether that's Tencent itself as a developer or any of its own or any of its subsidiaries like Riot Games, and choose to publish them in the region. That is a 5-year agreement, so it's meant to be expiring in 2023, and it's certainly a risk. Is there a chance that Tencent may not renew the agreement? So my personal view on that is that it's probably fairly low risk. So Tencent's stake is now around 21%. It's been diluted a lot, but it's still a very substantial stake. And so I feel like that brings in a pretty strong alignment of interest. Would they do something to destabilize, Garena and Sea? Probably unlikely. But look, there's always the risk that they may want to, pursue self-publishing in the region themselves over the longer term. I think that's not easy because Southeast Asia is a highly heterogeneous market. All the countries are so different, just in terms of culture and language and religion and the state of economic development, etc. And so it's not easy to distribute across all of these highly different countries, and Garena's been doing this for over 10 years, and so they've really built up a capability and local knowledge and know-how in doing so. But look, having said that, Riot Games, which as I mentioned is owned by Tencent, I mean they've I think in 2019 it was they sort of said we're going to be self-publishing our games in the region from now on. So Garena gets to retain League of Legends. But all new games, Riot Games will look to, they'll sort of invest in the capability of being able to do self-publishing in the region. And, is there a chance that, the rest of Tencent follows suit? I mean, possibly. But as I said, I think that kind of strong alignment of interest with a large stake should help manage that risk. And even if they were to do that over the longer term, I think they wouldn't do it in a way that's sort of disruptive to Garena. I mean, maybe they do it on a gradual basis and maybe, grandfather some of the older, some of the existing games that Garena's already distributing. So, Garena will get to retain them. So I just don't think that they do it in a very sudden way.
Yeah, very cool. And yeah, they've got that 20% at the end of the day, so why rock the boat? Maybe we'll move on to Shopee after Garena. So obviously a lot of the cash flow from Garena gets funneled into other things like Shopee and SeaMoney, but with Shopee, maybe to get started on them, can you just give a bit of background to their business model and what their plan is and how they fit in with the Sea's ecosystem?
Yeah, so Shopee is sort of the e-commerce platform of Sea. And so it started off as a C2C marketplace, so therefore focusing on small sellers, mom and pop type sellers. And it's a marketplace, so basically it doesn't really take inventory risk. It helps facilitate transactions between buyers and sellers and takes a commission, right? So therefore it's a very asset light model and very scalable model. I mean, they do have some inventory, first party inventory, but that's a very small part of their GMV. So most of Shopee's, by far the large majority of Shopee's GMV is kind of the marketplace model. In terms of what their plans are, so right now Shopee's become the number one or maybe number two potentially, depending on which metrics you look at in Indonesia. That is, but it's number one across all the other countries in terms of market share. So the focus is on really enhancing that lead in Southeast Asia, but they've also now been expanding in other markets. So LATAM is a big one. So they entered Brazil in 2019, and that's now actually after many years of them calling it just an experiment and a trial, they've now actually really changed the labeling to that it's a core market, which is the first core market outside of Southeast Asia and Taiwan for them. So that shows that they're getting really good sort of success there. And they're expanding in other LATAM countries, so Mexico, Chile, Colombia, and then more recently they've expanded into Europe as well. So literally in the space of 2 months this year, they've entered 4 markets: so Poland, France, Spain, and India as well. So so I think that's really kind of the focus. They're probably quite likely enter other markets in the future, but really the focus of this business is just on growing kind of scale and I think in terms of how it fits in with Sea's greater ecosystem, it's a interesting question, because so certainly one may ask, like, why did they start an e-commerce business? They started this business in 2015, right? And someone may ask, like, well, what's the synergy or the fit there with the gaming business Garena? And I think the thread that sort of ties together all of these businesses is that Sea and really Forrest Lee, their vision is to use technology to kind of better the lives, and meet the unmet needs of populations and demographics in emerging markets. Initially that was just Southeast Asia, but now it's gone more global than that. And whether that's through the provision of very accessible gaming, like in Garena, or with Shopee, where they spotted a need that was really underserved. So they're kind of serving kind of small sellers and mum and pop type merchants. If Lazada, who was the original incumbent, their focus was more on kind of really high-end electronics and branded apparel, etc. And so Shopee realized a need in this low end of the market, and that's where they've come in. And then the same thing with SeaMoney as well. Like SeaMoney, what the purpose of SeaMoney is to help meet the needs of the large parts of the population in Southeast Asia that are unbanked or underbanked, which is about 2/3 of the population. So I think this is kind of your question of how does Shopee tie into the ecosystem. I think all these businesses are sort of tied together through this vision that Forrest Lee has of using technology to help enhance the lives of people in these markets, and really fill a gap.
Yeah, for sure. And you mentioned Lazada, and so obviously Shopee's competition. Who do you feel is Shopee's greatest competitor? Because they're very different. Like, Shopee's very mobile first. Lazada started more web-based, browser-based. So who do you think, maybe specifically within the ASEAN region, who do you think is the biggest competitor in their threat? Because Lazada is known not for localizing their product offerings. So, how do you view that competition landscape, I guess?
Yeah, there's a few sort of key regional players. So Lazada certainly one. Lazada used to be the most dominant company until Shopee, kind of decisively overtook them in the last 2 years. It looks like certainly that Shopee has a pretty handy lead over them now, but I don't think Lazada's to be completely dismissed. They're owned by Alibaba at the end of the day, and Alibaba's got more than enough capital to keep funneling into Lazada, and particularly now with the kind of the political troubles back at home and the tough competitive situation, they're probably much more focused now on international growth, and so I think Lazada's a very important channel for them for that. So I don't think we should be entirely dismissing them, and I think they've certainly learned from some of their mistakes in the past, where they've really failed on adequate localization and attracting local management teams and helping to serve merchants in a good way. I think they've really focused on fixing these problems. And the other key competitor is really, Tokopedia Gojek in Indonesia, which is now called GoTo. That's probably the more serious competitor to Shopee the reason is because Indonesia is the largest e-commerce market and probably the most important e-commerce market in the region, and GoTo is the local incumbent. Depending on which metrics you look at, Shopee and GoTo, the sort of number one and number two, depending on how you look at it. This is an interesting one because I think with the fact that they're now merged with Gojek, they have the potential to be a much stronger competitor. There's synergies there between being able to leverage, Gojek's transportation fleet, which is hugely important in e-commerce, and also this company is not going to have sort of capital problems. I mean, they've just raised a $1.2 billion pre-IPO round, and the company's going to list initially in Indonesia next year, where they'll probably raise a few more billion, and it looks like they'll probably do a secondary listing in the US later as well. So, they are not going to be there's not going to be a shortage of capital for them. So again, this is a sort of very kind of powerful competitor to Shopee. I think the one key advantage that Sea has, as I mentioned, is that cash flow generation engine of Garena, which means that they can be kind of aggressive on things like pricing and sales and marketing. But yeah, look, that's broadly the landscape.
Yeah, so maybe we could do the same deal for SeaMoney now. So maybe could you explain a little bit about who SeaMoney is, what they're doing, what their goals are, and again, how they sort of fit in with everything that Sea Ltd is doing?
Yeah, sure. So SeaMoney is the FinTech business of Sea, and originally just started off as a payments tool, and that's still probably the more important part, at least right now, of SeaMoney. So the e-wallet that's attached to Shopee, and so it helps facilitate both on-platform transactions for Shopee, and increasingly they're penetrating into offline merchants as well, and so they've been very aggressive on pursuing that. But generally, payments is somewhat of a commoditized revenue stream. I mean, everyone's capable of providing that on a equally kind of comparable basis, and so really how you add value with a fintech business is to expand into value-added services, and really the important one here is digital banking, so in providing services such as buy now pay later, as well as consumer and merchant loans. And so I mentioned before the huge amount of unbanked and underbanked parts of the population in Southeast Asia. So there's a real big opportunity here for SeaMoney to help facilitate those needs. And one of the reasons tech players generally are getting into the space is because they've got these large user bases that they're able to leverage, and they've got a large amounts of data and information on through the transactions that are facilitated on the platform, that are able to have a good insight into consumers and from a kind of credit scoring and risk assessment perspective. And so in some cases better than the banks, and so therefore they're in a good position to be able to provide things like lending in a very frictionless way, using kind of just mobile apps and digital tools, without having all the costly infrastructure that traditional banks require. And so yeah, that's certainly a key part of SeaMoney's kind of growth plan, and there'll likely be other value-added services they'll pursue, such as things like funds management and insurance, and that's really the objective. It's kind of to start off as a payment tool, initially an on-platform a payment tool for facilitating on-platform transactions, expand into offline to increase the use cases, and then really kind of build up from there into value-added services.
Just curious, how tough is the regulation in that space? Like, is it more of a case of waiting for licenses, with banking license stuff, to get started, or can they just go as quickly as they want? Like, how does that work?
So typically, you do need a digital banking license. I mean, you can potentially just start sort of offering loans, etc. But the problem is that you may get tripped up and get into some trouble doing that. And so generally the more prudent thing to do is to wait for the regulator to issue whether it's digital banking licenses, as Singapore has done, or guidelines around digital banking, which is what Indonesia issued this year. And so, yeah, look, I think generally the regulatory landscape in Southeast Asia has becoming more supportive of the whole kind of digital banking and digital payment space. And I think the reason for that is that they see the value that the digital tech players can offer. I mentioned before the huge problems around underbanked and unbanked people, and I think they realize how efficiently these sort of players can actually help sort of fix these problems and provide these services. And so generally the landscape's been more supportive. So Singapore's issued digital banking licenses last year. Indonesia's issued out guidelines around digital banking, so that means that there's much more certainty around how you can you can launch a digital bank and what you need to do so. Malaysia is also currently in the process of issuing a digital banking license, and I think Thailand is either in the process or will be considering soon. So generally, the landscape looks to be becoming more supportive of the fintech space more generally.
It's a tough little space, Southeast Asia, isn't it? Like so much different regulations, and then just managing everything. So to maybe pull on the thread about sort of promotions and the aggressive marketing, maybe this is a combined question for both Shopee and SeaMoney, but I remember reading about how in Vietnam it's common to download multiple e-wallets, pulling up whichever has the best discount, and then use that for shopping. But the challenge is often getting users to stick or continue using an app after those promotions end. So how does maybe SeaMoney or Shopee get their users to stick? Is it just a case of scale, or how do you go about it, do you reckon?
Yeah, so and that's a great question, and I think I mentioned before that you could say that the payments side is somewhat commoditized because everyone's offering a kind of a fairly kind of equal type product, right? So then how do you differentiate? So one part is scale in the sense that you want to have an ecosystem that's got a very high use case, and so that's certainly the case with Shopee and e-commerce, where people tend to transact on it a lot, and certainly the case with things like ride hailing for Grab, right, which is the other major regional competitor. The more you use these sort of services, the more likely you are to want to just have a wallet with money on it to kind of reduce friction, etc. But then again, how do you incentivize people to use the wallets? And I think that's where the aggressive kind of marketing comes in, really in the form of promotions and discounts. So for example, if you use Shopee, you can get Shopee Pay, the wallet. You can get Shopee Coins, which is the kind of I guess the virtual sort of currency that you can use to offset your purchases on Shopee. So that's been a very kind of important part of scaling Shopee Pay. And really the idea is that once you get people kind of habitually used to using the wallet and like hopefully you can sort of pare back these discounts over time. So it's really up to having the best sort of user interface and having the widest network of merchants, offline merchants, etc., to really increase the use cases. And so therefore, after you get the person through the door with the sales and promotions, it really comes down to execution to sort of keep them there. And so that's really that's really the game plan. And I guess the other key reason for why why these sort of companies pursue wallets is that when you have some money on the account, maybe subconsciously you're more likely to keep coming back to that platform. And actually, just sort of always sort of searching through more products and whatever else, because you've got some money there. So it does create a bit more of that stickiness. And so I think these are all sort of the types of effects that Shopee Pay is going for in trying to retain customers.
Yeah. And maybe we'll finish with Sea's management. So how critical do you think Forrest Li and Chris Fang are to Sea Ltd success? Like Forrest Li's taken a bit of a different role recently, like the last few years, more visionary founder, but how critical do you think they are overall to Sea's success?
Hugely important. I mean, so Forrest Li, he is really the visionary leader behind the firm, and he was one of the original co-founders back from 2009 with Garena. He really helps set the strategic direction of the firm, and I think just to another point around his importance, the fact that Tencent pledged all of their voting rights to him, I mean, really highlights to me how important he is to the business. So even though he's got about 11% shareholding, he's got well over 30% of the voting power, and so he is hugely important to the business. Chris Fang is probably the second most important person. So he is the head of Shopee, and more recently promoted to the head of SeaMoney in 2019. And actually in the third quarter, he was promoted to the president of the company, which effectively means he's now formally the 2IC to Forrest, and he's still got the roles of running Shopee and SeaMoney, but now he's got a bit more of a kind of oversight role across all the businesses, and helping trying to kind of create synergies between them, which works well because he also, before he started running Shopee in 2015, he was working in the Garena mobile business, so he's obviously highly familiar with that business as well. I think that was a great move to put him in as a president, because he was often seen as a key man risk. I mean, he is really the guy that's driving Shopee and SeaMoney. As I understand it, Forrest Lee's pretty hands-off. He kind of lets Chris really run with operations day to day. And yeah, like the whole success behind Shopee and SeaMoney more recently has been really driven by Chris. And yeah, so the fact that he's now been promoted to president, I think, is a recognition of that, and is a great way of helping retain him in the business. The only thing I would say is that at the moment his shareholding is less than 1%, so I really hope that with this new promotion they kind of fix that and give him more shares, because I think that's really that's something that needs to happen to kind of help ensure that his retention in the business.
Yeah, no, interesting point. And before we wrap up with Sea Ltd, is there anything we haven't talked about that's consequential about Sea's future, in your opinion?
Yeah, I mean, with tech businesses more broadly, but certainly a business like Sea, it'll likely evolve in a very kind of non-linear and very kind of difficult to predict manner. We as humans tend to think in a very kind of linear way and just extrapolate what's in front of us. But if you just look at I think when you do that, that makes forecasting of a business like Sea really fraught with danger. I mean, if you just look at the history of Sea alone, right, the fact that they would be able to produce, literally kind of strike lightning with a bottle with FreeFire to become the biggest game in the world. That in 2015 they would launch Shopee, which would become the largest e-commerce business in Southeast Asia. Later on that they would expand into beyond Southeast Asia into kind of Brazil, and now increasingly other markets as well. I mean, I don't think anyone would have had that in their models 2-3 years ago, right? So that, it's really hard to predict how this business will evolve, and even I think 2 or 3 years from now it'll look very different to today. So I think what does that mean when there's so much uncertainty with a business like this? What do you anchor to? And I think it really does come down to management. As the stewards of this business, I think you need to be able to trust them that they'll do the right things. They'll act in the interest of shareholders and with a long-term vision, and they'll continue executing well and really spotting opportunities as they come up and capitalizing upon them. And I think I've certainly got a lot of comfort that whatever happens, I think Sea is in good hands with Forrest Lee and his management team.
Yeah, no, that's great. A great way to wrap up. So yeah, maybe to finish off, before I get my closing round of questions, maybe just talk about you as much as you want to. Obviously you're anonymous, but you're in Singapore now from Australia. Like, where are you now? What are you doing? And how'd you get here? Tell as much as you want, tell as little as you want. It's up to you.
Yeah, look, I've got a pretty sort of traditional finance background. So I did sort of commerce finance back at Sydney University, and I joined investment banking upon graduation, predominantly doing TMT and consumer sectors. And then I had several kind of buy-side and corporate M&A roles in Sydney. And as I mentioned, in 2018, I moved to Singapore to join a large investment management platform here. And so, predominantly my focus is on private equity. So, looking at private equity deals. All this public market stuff I'm doing is really more for my own interests and my own passions. I'm certainly not a fund manager or an equity research analyst, even though I think there's definitely a lot of synergies between sort of just doing private equity and kind of looking at public markets. I think the way I approach public market investing is with a very kind of private equity like mindset, which means as you can probably sort of tell from my writing, I tend to go into a lot of detail, almost forensic amount of detail, and I'm really focused on potential returns going forward. So yeah, that's broadly where I am.
Yeah, and if I'm allowed to ask, so from Sydney to Singapore, what was your thought process? Was that always a plan, or what was the decision making behind that, I guess?
Yeah, so I guess both sort of personal and on the professional side of things. Personal side is that my wife's actually Malaysian, so family in the region, and then on the professional side, it's as you probably know, I think with Australia the market tends to be a bit more kind of domestic and narrow focus, and I think coming to a place like Singapore was always pretty exciting for me because I think it's a much more international market. Singapore itself is very small, so it's forced to sort of look internationally, and so a lot of the coverage that you do here is not just Southeast Asia, but I think really global. And so I think that part of it has been really exciting for me, just getting exposure to new types of businesses, business models, sectors, and markets that I think from Australia is probably a little bit harder to get that access.
In terms of your life experience, what's been the most undervalued life experience that maybe university age students don't give weight to? Like, what's an underrated skill or experience that you think they should have?
Yeah, I think something like networking is hugely important. I think in university, and maybe certainly that was my experience, but I think it's very easy to just sort of stick to your group and really kind of stick to people within your discipline. But I think it's a really good idea to sort of branch out and meet people across different fields, different disciplines, get exposure to different mindsets and a way of thinking. And it's not just university. I think even as you do these internships in universities, or you get your first sort of graduate jobs, just also having kind of conversations with people across the business and in different teams, and just learning a bit about what they're doing and just the business more broadly. I think that's hugely important. I mean, you just don't know what sort of relationships you'll be able to create, and I think you want to welcome some of that serendipity into your life. So generally, I think networking is a skill that will set you up. It's hugely important in life.
Yeah. So how have you gone about it, or how do you think others should go about it? Is it just putting your work out there, like with your writing, or how do you think maybe?
Yeah, I mean, that's certainly a great way. I mean, I think that's been one of the really unexpected benefits. I think as I started writing this blog 5 months ago, I think the amount of people that have kind of reached out and wanted to strike up conversations, and just like this one. So I think that's a really great way of doing it. But otherwise, I think just kind of putting yourself out there, reaching out to people. I think generally I find people want to be pretty kind of helpful, and generally people want to sort of pretty happy to get to know you and help you out where they can. And I think I think just sort of taking the initiative to do that. It's always probably much more comfortable to sort of not do that and just stay within your circle. But I think really putting yourself out there just trying to sort of strike up those relationships and conversations.
Yeah, no, that's a great answer. And in terms of you and your worldview, has there been any maybe books or experiences or anything that's been influential in shaping your worldview?
Yeah, so I think really probably 2 books in particular have been the most impactful on me. So the first one is Anti-Fragile by Nassim Taleb, the author of the famous Black Swan. The ideas in Anti-Fragile sort of extend on his ideas in Black Swan, and really what they're about is systems or setups where things like volatility and shocks help strengthen them. And I think as opposed to fragile systems which kind of so tightly wound that with any volatility or shocks they get destroyed, or even just robust systems which kind of stay the same. And I think what I like about this idea of anti-fragility is that it just applies to so many different aspects of life and the world, whether it's business or markets or investing, even things like fitness and health and really personal lives. I think the more you can kind of put yourself in a position where you welcome a bit of volatility and testing periods to your life, because it helps strengthen you and evolve you. I think the more you can do that, I think the more successful your life will be. And The second book is Poor Charlie's Almanac, which is a popular book about Berkshire Hathaway's vice chairman Charlie Munger, who's an incredibly intelligent and person, and is really a learning machine. And he espouses the ideas of worldly wisdom and having knowledge across a broad set of disciplines. And I think that book, I read it quite a few years ago. I think it really set me on a path of wanting to read more widely and learn about a whole range of ideas, outside of my field, and I think that's hugely important in life.
Yeah, no, 2 great book recommendations. I don't know how much you can expand, but what's your plans or visions, I guess, for the next 5-10 years or going forward? Like, what areas are you most curious about?
Yeah, I think probably the focus for me, sort of 5-10 years is, I think, really just to keep improving my skills as an investor, both in public markets and private markets, which means continuously learning, staying curious, and doing what I'm passionate about, which is just learning about new business models, new companies, new sectors, new markets. I think that's the part that really interests me, and I hope to sort of keep writing about it on my blog. So I think that's really it.
Yeah, perfect. Oh, and before I forget, anything you want to plug? Where can people find you?
So Twitter, so Punch Card Invest, and I've got a Substack blog. You can just Google Punch Card Investor or find the link on my Twitter account.
Perfect. Punch Card, thank you so much today. I've had blast. It's been great for me. So cheers.
Really enjoyed it. Thanks for having me.
If you enjoyed this podcast episode, be sure to check out the website compoundingpodcast.com. On the website, you'll find every episode complete with transcripts, show notes, and other related resources. If you want an email notification every time an episode releases, plus my lessons and takeaways from each episode, be sure to sign up to the Substack. So that's compoundingcuriosity.substack.com. Either way, links to all content mentioned today will be in the description below, and you can also connect with me on Twitter @ScarrettKalani. But until next time, have a good one.